moderating that conversation is Vanessa Okuraiwe, a principal with Edward Jones. Vanessa is a part of the strategic leadership team that helps the firm achieve its goal of being a place for belonging for all and to fulfill the purpose of making a meaningful impact in the lives of clients, associates, and communities. She's responsible for helping the firm increase its representation of different groups and foster engagement and inclusion. Vanessa earned a bachelor's degree in economics from Edo State University in Nigeria, a master's degree in development economics from the University of Kent in Canterbury, and an executive MBA from WashU in St. Louis. She's an advocate for economic and educational development, and she's active on the board of the St. Louis Community College Foundation and actively engaged in the Arts and Educational Council of St. Louis. Vanessa, welcome to the program. Thank you so much for being here. Let me just go ahead and hand it off to you.
Thank you very much, Ed. It's a pleasure to be here. And hello, everyone, and welcome to the 6th Wealth and Asset Management Research Conference that's hosted by the Olin Business School in Washington University, just like you've heard. And you heard about the theme this year. It's finance, yesterday, today, and tomorrow. You're going to hear us weave that theme into the discussion that we have today. As you all know, in the assets and wealth management industry, our primary responsibility is to create value for our clients and our investors so that they can accomplish what's most important to them. And it doesn't matter whether it's an individual investor or an institutional investor. Within our industry, we look at maximizing growth potential of investments. And when we think about the individual investor, we want to have a broad overview of that individual's goals. We want to find out what's most important to them so that we can work together and provide the right experiences, the right resources, the right services, the right suite of products so that they can feel informed and they can feel confident about their financial well-being. That's what we do in our industry. And one of the significant opportunities that we have is to really accelerate when we apply this lens towards more diversity and more inclusion within our organizations. And it's not just within the talent space, it's also looking at our clients. So when we think about the future of our clients, inclusion and diversity is very important. Within our industry, we can serve tens of millions, I should say, of clients. We can help them create wealth, we can offer support, we can help improve financial well-being. And we can do that for millions and millions of people. And we're going to start figuring out how we do that with the conversation that we're having today. So first of all, let me introduce the panel. We've got a great group of leaders here to talk to us today about how they're seeing inclusion and diversity, not just in their organizations, but across our industry. So I'll start by introducing Stacey Winning. Stacey is the Chief Talent Officer at Dimensional Fund Advisors. Stacey has been with Dimensional since 2012. She also chairs the Executive Council for Diversity and Inclusion, and she is an expert in the talent and human capital stratosphere. Stacey brings over 15 years of experience in financial services, and looking forward to her perspectives today. Next, we have Dr. Benjamin Akonde from Stifel. Benjamin leads the diversity and inclusion efforts at Stifel Financial. He's also a director of human resources and serves as a senior vice president at that organization. Prior to joining Stifel just over a year ago, Benjamin spent over 25 years in leadership within academia. And in his most recent position, he served as a assistant vice chancellor at Washington University here in St. Louis. And finally, we have John Rogers. John is the chairman, co-CEO, and chief investment officer at Ariel Investments. John started Ariel Investments Conference in 1983, and it's now a multi-billion dollar asset management firm. Additionally, John has served in various capacities. He serves on several boards of directors, and he has been recognized nationally for his commitments to national service. So I'm really excited to have this panel and for us to begin our conversation. And Stacey, I'll start with you. I think over the last 2 years, many organizations doubled down on their commitments to diversity, equity, and inclusion. And I know many people who are watching or listening to us today are curious about the impact or the progress that these organizations have made. We would love for you to just start by telling us what your commitments to diversity and inclusion were and what progress you've made up till now. So Stacey, we'll start with you. Thank you.
Sure. Thanks, Vanessa. And I'm just want to say I'm really excited and honored to be here. I also think, if it's okay, I'll just mention I'm not at my best. I had kindergarten graduation this morning, which was particularly emotional after yesterday's shooting. So my heart just goes out, and I'm sure there's many parents on the call. And I think it's relevant because authenticity and being a whole human at work is a huge part of D&I, and in particular, what we're trying to achieve at Dimensional. So I hope it's okay to just sort of start with that. So as far as the journey, I think something that is important to establish is it's, at least from our perspective, we don't view it as linear. Instead, I think of it much more as a spiral or a recursive circle where you go through a series of stages and then they begin again. And each time those circles get tighter and tighter. I think it begins with having a really robust strategy. And then you figure out a plan of how to actually execute, which is sort of the next part of it, and then eventually evaluate. And then you take your evaluation and you kind of go back and revisit your strategy and your plan, and you just sort of keep going. So I'd say where we are on that recursive journey is somewhere between executing. We have a really robust strategy that we're really committed to. We have a plan of attack, if you will. And now we're in the midst of bringing it to life and beginning to evaluate so that we can iterate over time. Some of our commitments in particular, like I mentioned, are really about authenticity. So what I mean by that is being your full person at work and creating an environment for our employees where everyone can do that comfortably, but also being authentic in our strategy, in our approach, and doing things that are true to Dimensional, true to our employees, and not necessarily just to tick a box or to appease whatever demand is coming, from the outside. So that's a big commitment of ours, and really a heavy focus on inclusion by inclusion rather than exclusion. And so bringing everyone on this journey, looking at this as something, yes, at the end of the day, I'm responsible for devising the strategy and bringing it to life, but it's everyone at Dimensional's responsibility. Quite frankly, it's everyone everywhere's responsibility to participate and commit to that. So that's sort of where we are in our journey.
Thank you, Stacey. Benjamin, please weigh in on where you are. What's your journey been like at Stifel?
I think, again, thank you for the invitation. I'm really glad to be here this morning. The journey at Stifel has preceded me. It's been ongoing. One, because there's totality of commitment by our chair, Ron Krasinski, about the need to ensure that we reflect not only society, but also our current and future clients. And so our goal moving forward is sort of putting a structure in place that is consistent, that is understood and embraced, that is owned by not just part or leadership of the organization, but permeates across the organization. And that's the challenge, because in doing that, you're going to have different perspectives and different ways of trying to do that. And our goal is not to rush the process. Our goal is to make sure that we fully plant the seed of diversity, equity, and inclusion, so that when it begins to germinate, it's it's sustainable. So that sustainability aspect is also very, very critical. I also wear the hat for lead of ESG at Stifel, environmental sustainability and governance. And so that has enabled us to be able to make sure that we align our specific strategy with the longer term reality of ESG. And I have to say to you, I think that the real challenge here is being able to transition the ideals and ideas of our leader to the rest of the organization, and to do it in a way that it doesn't look like a mandate, but it looks like something that is natural, something that is progressive, something that is necessary. In an organization like ours, where we've got a lot of success over the years, we're keeping that in context. And so the goal now is to address the issue of diversity, not just from the entry level in terms of internships and new entry level positions, but to try to do it across the organization, and then to go outside the organization, particularly as it reflects on our involvement in community, how we show up in community, the projects that we support in community, and how those projects that we support will come to benefit our diversity strategy, short term and long term. And so that's the approach that we're taking right now. Coming from academia, where I have to say diversity, equity, inclusion has been very, very, very successful in so many organizations, including my former institution, WashU. They just didn't talk about diversity. They made it come to reality. And a classic example is that incoming freshman class this year that had over 50% diverse students. That's a huge step. And that wasn't an easy thing to do. But WashU was able to accomplish that because it set those stretch goals, but more importantly, it found a way to articulate and to get it done. And so benchmarking with academia in terms of what we've done there is also one of the things that we're doing as we move forward in our strategic diversity strategy at Stifel.
Thank you for that perspective, Benjamin. John, I'm curious from your angle. You've seen this for a long time. You've been in the asset and wealth management world for a long time. And as I said at the beginning, in 2020, we saw a ramp up in organizations really committing to doing more when it came to inclusion and diversity at their organizations. What's your perspective on where we are now in May 2022?
Well, thank you. As you know, we were the first African-American owned money management and mutual fund company in the country's history, and we started 39 years ago. And I'm getting close to Professor French's 64 years. I think we're 2/3 of the way there. And hopefully we can make the case of it's skill versus luck. So again, hopefully I still can keep doing this for a long, long time. But for us, our journey in what we're talking about today, your question about 2020, is it really was a sea change after the George Floyd murder. Melody Hobson, our co-CEO, who's been with us 31 years, but between the two of us, there's probably not a day that doesn't go by that we're not asked to join a Zoom like this to talk about the importance of diversity and inclusion, talk about how we built our diverse team at Ariel, how we're impacting diversity and inclusion on the boards that we serve on. And it's been great. We get to talk to terrific leaders like those that are on the call today. We get to meet and talk with boardroom leaders, and we actually have had a lot of impact with the companies we invest in now. They're listening more carefully around these issues. We've consistently pushed them around the diversity of their teams, diversity of their boards, and someone reluctantly just be polite and listen. Now you're seeing more and more activity. We pointed out over the 39 years, we can point to over 50 companies we pushed to have their first diverse director. But it's accelerated in the last 2 years. There's just no doubt about it. Our civic committee in Chicago is borrowing a term that the University of Chicago created called business diversity instead of supplier diversity. And the theory is that we want to include people of color and women in all aspects of our economy, not just typically supply chain, construction, and catering jobs, but into everything that we do. So it is just, the fact that people are willing to listen, to change terminology, to think about more creative ways to build wealth and opportunities in minority communities. It really has, accelerated greatly in the last couple of years.
Thank you, John. And we hope that that continues, until we don't have to have the conversation again. It's truly integrated into what we do as businesses. So thank you. Benjamin, I'll come back to you and I'll refer to this as the elephant in the room. How do we go about really moving the needle on diversity, equity, and inclusion in an industry where historically it's been successful without that emphasis? Talk a bit about that.
I have to say to you, Vanessa, that's the biggest challenge. That's the bigger one. And the challenge is that, diversity initiative is tough to execute in an industry where discriminatory practices are difficult to discern. And everyday decisions are being made on built-in biases, not just racial or gender, but on what decision makers feel is right, what decision makers feel has worked, that they've succeeded in. And I think that poses a challenge, but it's not insurmountable because we have to approach representation by trying to connect to it that it actually has a return on this investment. I coined it return on diversity, because when you're trying to introduce this ideal of representation that reflects society in an industry that has been extremely successful, without it, you've got to be able to come up with a justification as to what value added does it bring to that dynamic. And everything that I'm looking at Stifel in terms of our diversity efforts, I'm making sure that I quantify the return on that investment, that I can clearly speak to how it expands our pie, whether it's in terms of clients, whether it's in terms of trying to get great talents, whether in terms of dealing with the great resignation and saying that in order for us to be able to retain our best talent, whether that diverse talents, these are the things that we've got to do. And essentially when it comes to recruiting in colleges, how do we go out there and get the best talent possible that are diverse in such a way where the focus is on quality, not quantity. It's a challenge, but I don't think it's something that could slow us down. I think we just have to be aware of the reality that when we're speaking to this issue of diversity, those individuals that are not buying it are easy to come back and say, how does this make us better? How does this improve our bottom line? How does it increase our market share? And I think we've got to be ready to be able to provide clarity and a very honest response as to how this diversity efforts will map out. I'm an economist by profession. And so the things that I'm looking at, the lens that I'm wearing is about accountability. It's about being able to show impact. And I think there are great stories to be told as to how bringing in new talents that have diverse backgrounds, that represent what we don't have, that bring to us the kind of preparation and education and experience and relationships that we don't have, is a value added. And it's a value added that is quantifiable. And I think that just in closing, I'll say this, I think clearly one of the things that we tend to overlook is the impact of those that are already in the organization, the majority. I think most diversity efforts fail because we overlook how critical it is to get buy-in from those that are already here, so that they don't see this initiative as a negative, as a zero sum. With more minorities or more diverse candidates means that you have less of others. You got to kill that perspective, and I think the best way to make sure that that's not a relevant issue is to have deep conversations, no holds barred discussions as to your fears, your concerns, your ideas, and ways in which we can overcome. And I think that when you have those discussions, some of them are private, some of them are public, some of them you have to sort of pull it out of people. Those conversations will lead you to be able to put a strategy together that is sustainable. Because essentially, what you're talking about when it comes to diversity is is a significant level of change. And I've come to the conclusion that the only person that likes change is a wet baby. And so when you introduce change dynamic into an organization, it rattles the cage. It scares the bejeebers out of people. We've got to make sure that diversity is not a scary monster, but actually an input, a motivator, a catalyst for organizations, and to be able to show examples of what it works. I've spent the last couple of weeks talking to our competitors, talking to our peers, whether it's BlackRock or folks at Goldman and T. Rowe Price, having conversations with them, sharing ideas, sharing follies, where they failed, where they've succeeded, because I really believe that we learn more from our failures than we do our successes. And what I've heard, as highlighted for me, the things that we're going to try to do as Stifel, and perhaps the things that we're not going to do.
Yeah, Benjamin, thank you. I think I'll be using your analogy around change. Many parents can relate to the fact that, yes, dirty babies, will not let you hear the word until they get changed. So I appreciate that story or that analogy. And I'd like to underscore the whole idea of the zero-sum game. I know in my organization, we've had the same conversations. It's ongoing about this is a win-win. It doesn't mean that because this conversation is elevated around DEI, that means less of others. So it's about everyone being part of the conversation. And Stacey, I'll come to you because we've seen a lot of research around the benefits of diversity. The different consultancy firms have proven this out. They've done the research. How do you position diversity and inclusion as a competitive advantage in your organization? What's the story around that?
Sure. I was thinking about, I've been having these conversations related to diversity in the industry for coming up on 20 years. And I kind of can't believe we're still talking about having to quantify the bottom line. I mean, Benjamin, I completely agree with everything you said. And I just find that frustrating at times because honestly, it's common sense. The more perspectives you have, the better you're going to be able to solve problems. But I don't think that's a controversial statement. Problems take many sizes and shapes, business problems, business opportunities. And if you have different people coming together, and I use diversity very broadly in terms of the lived experience, of course, race and gender, but many other facets as well, you're going to have a lot of opportunity to really evolve and possibly, in many cases, likely come up with better solutions because of it. So I think that that's a really important piece to challenge and push on for all of us. Talent is evenly distributed. So to your point about the zero sum and about perspectives that often suggest, spaces would be reserved, talent is everywhere. If you are not recruiting everywhere and in every type of demographic and intentionally in underrepresented communities that don't necessarily find our industry, you are not getting the best talent. And so that's how we think about it. So we think about casting a wide net out of truly looking for top talent under the assumption that it's everywhere and it's spread and distributed evenly. And when I talk about top talent, I think sometimes people immediately jump to pedigree. That's not it. Sure, there's room for people that come from top colleges. There's room for people that didn't go to college at all. And there's lots of different types of colleges in between. And just different, again, that lived experience and what people bring, traits like grit, resilience. These are things that show up differently in different communities. And the more you have in your organization, the more formidable you're going to be. So that's a really important part of how we think about it.
Excellent points, Stacey. And
yes, I know I get mad about it. I'm just like, oh, the business justification. The business justification is that we're gonna be better, so yeah.
Yeah, no, I'm pleased you said that. There's a really great article, I think in the HBR that says enough of the business case. I think that should be required reading for many people. So John, let me come to you. So John, I try not to fan out on this Zoom call because I've followed you for a long time on the other side of the Atlantic. I remember some of the articles that used to be in Black Enterprise, and I was just so inspired by what you were doing through Ariel, and then Melody coming on board, and just having that as an inspiration for many of us who haven't seen anyone do an asset management firm like what you did. So it's very inspiring. You've been in the conversation for a long time. You've been talking about this, been advocating for the importance of more diverse perspectives in our industry. So what would you say leaders need to do in order to be successful when it comes to bringing on more diverse talent and creating more inclusive cultures within their organizations? Well, how do they need to focus on it? How do they need to focus about retention, attraction, and leadership developments?
Well, I think there's a couple of thoughts there, and one, you guys are working together, Edward Jones and Washington University coming together. That kind of a partnership makes a difference. That's what I've tried to do with two institutions that I love, in Princeton University, where I went to for college, and then I went to the University of Chicago's high school, the laboratory school, and I built deep relationships there. And so I tell people that getting young people into our organization that were diverse has been because of this really intentionality of building these relationships. So at Princeton, I used to be in charge of recruiting minority students for Princeton in the Chicagoland area. And I went around and met all kinds of guidance counselors and helped spread the word. And we had events for minority students to learn about Princeton. And that's where I met Melody Hobson, by volunteering to help my alma mater. And throughout the 39 years, we've had a constant presence there on campus, being engaged and involved in getting to know up and coming minority students, having them come and start like Melody did as a summer intern, and their careers developed. The CFO of Northern Trust, Jason Tyler, I started out as a summer intern, as also as a Princeton student. So I think building deep relationships with the universities you care about make a difference. At the University of Chicago, we actually started at the high school. We have two students there, two diverse students for the month of May of their senior year, pretty much every year. We have two students this year that I got to meet yesterday for the first time, and they're terrific, and they participated in our board meeting for Ariel Mutual Funds. But we also have a program at the college where not only do we have interns every summer from the college, but we also created a program for minority students to get paid internships to work in the endowment offices, investment committees, investment offices of major endowments. Feeling the best way to learn about the investment world is to work in an endowment arena. And I wish I had known to work in the Princeton's endowment area when I was in college. I never thought about it. I didn't know, those kind of opportunities existed. And we also, of course, recruit from the Booth School. And I think have developed many talented, diverse students there. So I start with that by just saying it's so important. Institutions you love, build deep relationships with them. Then all aspects of that school will start sending you their best diverse students for full-time jobs, internships, and you'll be able to really get great people. And both the examples of Jason and Melody, they weren't thinking about financial services careers until they met me and had the exposure to the industry during their college years. And then the final thing I would say is once you have a leader like that, like Melody on board, having someone who you have to have someone on your management committee, someone who's really a leader who can be a Pied Piper for talent. They can help not only be engaged and involved throughout the nation, telling the story. That's what Melody does for us. She's always, again, on television somewhere, speaking somewhere. So minorities and women see her and say, I want to do what Melody's doing, and they apply for jobs at Ariel. So having someone who's very visible, who's willing to go out and speak about the importance of these issues, but they have to be in a leadership role, for them to be able to be that Pied Piper. And then, of course, once you develop that kind of a leader, they're going to be there to help mentor and tutor the up and coming executives and often keep them in place maybe when they were thinking about leaving or taking another opportunity. When there's someone senior that's well respected within the organization, that person can be so vitally important in keeping talent within the organization. And I've seen that time and time again throughout my career.
John, thank you. I think what you said is, so important, where asset and wealth management is for many people not in the consideration sets when they either go into university or they're coming out. And so by having that very visible presence with our young people, that it does make us a beacon for talent. So I appreciate you saying that. Talking about strategic partnerships, I like my African proverbs, and there's a Malawian proverb that says that you can't pick up a pebble with one finger, meaning that you need help when it comes to certain things. And so collaborating with different organizations is really important. And John mentioned the Princeton partnership and what we're doing here together. Stacey, could you share what strategic relationships or what strategic partnerships have worked for your organization recently?
Sure. I love that, by the way. That's great. You can't pick that up. I don't think you could pick up almost anything with one finger. So I similar to John, we have colleges and universities where we've built, very longstanding relationships, some overlap in some of the schools he mentioned. But we also have been working with some nonprofit organizations. Our focus, rather than sort of trying to canvas and blanket everything, we have chosen to focus on socioeconomic diversity in particular. And so we've been working with and identifying different organizations who go into underserved communities and provide some sort of different opportunity. One example might be pro bono financial advice. Another is education for a program that helps people who were first generation to go to college and who have now graduated, but don't necessarily know how to think about investing or saving. And so educating and providing that sort of financial wellness. And then also working with an organization that goes into underserved communities across the country and helps students who don't have socioeconomic means and have never even contemplated going to college, not only go, but get scholarships, aid, and then the organization stays with them through graduation and with a 95% graduation rate and 15,000 alum. And so it's pretty incredible. And so that's just been really important to us to find something that is kind of innate to what we do as an organization, and that can have a really strong impact for our employees, but also for society. And so that's been our approach so far.
Okay, thank you, Stacey. Benjamin, anything to add to that?
We focused our efforts on a couple of areas. I'll share them really quickly. The Sophomore Explorer program, and for us, this is geared towards diverse second-year college students, basically designed to provide exposure to investment banking, research, fixed income capital markets to students that would typically not have exposure in the financial service industry. And last summer, 13 of the 29 attendees were converted into full-time positions. For us, it was important to be able to show that we were willing to assimilate them into our system. And then we continue to explore other avenues to recruit and minimize bias, such as, sort of exploring the use of video software and artificial intelligence-driven assessment as a way of interviewing our candidates. We've also really focused on collaboration with other organizations, and one of the key programs we have is called Pencil, which is Principal for a Day in the New York City area, particularly in our investment banking space, where we've been able to recruit our partners and employees to participate in K through 12 Principal for the Day. It was last week. And we had a significant amount of participation. Again, the key for them is to be able to tell the story, to be able to engage these youngsters from the time that they are just in kindergarten all the way till high school, and to be able to answer the questions that they have on opportunities in the financial space. I realize that these are beginning entry-level opportunities, but this is the beginning aspect that's really very important to us. And then, of course, my experience in academia has enabled us to be able to engage institutions of higher learning in different ways. I remember, John, a conversation we had with Princeton, and they were very specific with us in terms of what we wanted. And they wanted to cut through the chase. So what do you need? What do you want? What kind of students are you looking for? Are you interested in diverse students? And one of the things that really impressed me with Princeton was that they were willing to meet us halfway in terms of the fact that they had a program that actually provided summer internship stipends to their students. So for organizations that can't afford that, Princeton meets them halfway. And so these are creative ways of making sure that they demonstrate their commitment to really provide an exposure to their diverse students, and that organizations are able to also meet them halfway. And so those are just some of the many examples of Financial Women Association program. We have one particular program that I'm really excited about. It actually brings in women for a 3-day period of time, college women for us to find a way to assimilate them and to showcase the different aspects of our organization in that 3-day period of time. And we go around the country with a search and find mission to try to find really talented as well as interested participants. And again, they're not particularly from the top schools in the country. In terms of top ranked schools, we find them from community colleges. We find them from state institutions. Our goal is to be able to really do a really good job in searching for talent, so that, and also finding individuals that we can bring them in and they have a chance of success in this industry. So those are some of the things that we're working on here, Stephen.
Thank you, Benjamin. Before we move off the talents conversation, John, I want to go back to you. So we're in a very tight labor market. I think we saw some data recently that says that there's, let me not go into the statistics, but there was a lot of data that showed that we have, more job openings than people who can fill those jobs. And so what should we be doing differently when we think about that tight labor market and our industry specifically? Is there anything we need to be doing specifically to retain our talents and to attract our talent, in addition to everything else that we've just discussed? I'm thinking specifically with regards to the current market conditions. So John, would love your thoughts on that.
Well, I think it's as you touched on this earlier, the idea that you create a culture where people can be themselves. I've been on the board of McDonald's now. I think I'm going on my 19th year. And Ray Kroc, founder of McDonald's, and the other leaders after them created a culture where people know that they wanted people who are independent spirits, people who, again, show up with all of their personality, all their creative talents. And I think too often companies get too stifled and they don't allow people to be themselves. And I know it's been a problem, particularly in the African-American community, where people felt like they couldn't be who they were coming to work every day. And that starts to grate on people. It starts to, harm their psyche. And so I think that idea is why I think McDonald's has done such a great job over the years of building extraordinary executives. A former CEO, Don Thompson, was there. At times we had 3 African-American board members, many franchisees, many suppliers. It's all part, which goes to the second point, having it all a part of your culture, that you believe in diversity and inclusion in everything you do. And so you're seen as authentic. So you come to work with your authentic self, but the organization itself shows up as an authentic organization. So you want to be a part of that team. You want to be a part of that family. And I think that's what we all have a responsibility to do if we want to develop a really great, diverse leadership team and company that will last generation to generation.
Thank you. So let's move to some of the data challenges in our industry. So there's been a lot of talk, especially over the last 2 years, about diversity data. What's available? How do we share the data publicly? How does this drive accountability? Stacey, perhaps you could share some thoughts around, how your firm is, looking at the diversity data challenges, or opportunities, I should say.
Yeah, both really. Sure. So, I think it's a really interesting topic because there are aspects of diversity that off the bat are very hard to quantify or that we don't measure. Again, beyond race and gender, there's other demographics. So the way we're currently thinking about it, and I'm going to focus a little more internally since that's really the scope of my job, is I am interested in knowing what is really going on with employees here, and particularly in our underrepresented talent groups. And so what are metrics or pieces of data or information that could give me insight into that, and that I could then use to measure over time? So examples of the types of statistics we're considering: promotion rates, retention rates, engagement rates, using our engagement survey to look by demographic. So our hiring data, of course, and looking at hiring data, not just who we end up hiring, but looking at it through the stages of recruitment to be able to identify if we have this great pipeline at the onset and that's not showing up in the end result, then what's going on there? And so using the information to drive more activity and more impact as much as measure progress. And I think, again, I go back a lot to sort of this recursive nature of how it just sort of keeps spiraling. I think data needs to be part of that. It kind of goes back to Benjamin's earlier remarks about quantifying things and being able to substantiate it, but it should also be trying to tell you the story of what's really going on. And that includes looking at it over years. You can have one great hiring year, and that does not tell the full story. You can hire extremely well and have great numbers of lots of diversity coming in, but if you're not retaining your employees, then you just have a leaky bucket and you're certainly not moving the needle forward, and your environment's probably not optimized the way, and I so strongly agree with John's comments about the importance of that authenticity in the workplace. So that's a lot of how we are thinking about data and trying in our own way first with ourselves, because we think it's important to kind of get our house in order, how to use that to really substantiate and drive our progress forward. And then obviously, ideally, lend that outside. I do have the opportunity to speak with a lot of our clients, and everyone's asking similar questions. I just don't think the EEO1 report is going to answer the true story of what's going on. And so how do we think beyond something like that and into a world where the data can actually drive our progress as much as inform it?
Thank you. And John, I think you've had a very clear point of view about the importance of making the diversity data transparent for all organizations. Could you share more about that?
Oh, well, thank you. I mean, as we've talked about it, we have a conference every year for African Americans and Latinx board members. Russell Reynolds has been our partner from the beginning, and Deloitte's been a partner the last several years. And one of the things we've asked all minority directors to do when they're in the boardroom is to keep track of 3 Ps. 1 P is the philanthropy, how the money is being spent, and measure that. And so how much is going to the local hospital or museum versus how much is going to civil rights organizations or historically Black colleges, keeping track of that. Keeping track of the purchasing by category to see how the money is being spent and the wealth's being created. So we think if you have on a board and you're in a leadership role, it's powerful when you sort of see all these high margin spends going to traditional white firms and the Black firms and the Latinx firms getting the low margin opportunity. So keeping track of that data by category is really important. And again, using the term business diversity instead of supplier diversity. And then finally, measuring the people and holding your managements accountable for the diversity of their teams. But as I said earlier, the importance of having people in the leadership roles, the most senior positions. And sometimes we forget that. We look at the pipeline all the time, but we don't hold people accountable with real data of how things are going at the top. So one of the things I'm actually thinking about working with the University of Chicago on, final point on data, is we should know at the University of Chicago which financial services companies do the best job of recruiting minority talent, promoting minority talent, and keeping minority talent there for the long run. It's just so important. How are we being treated there? We don't have that data, whether Goldman Sachs is doing better than Morgan Stanley versus, BCG is doing better than McKinsey. We should know that kind of data. And then reward those companies and institutions that do the best job of recruiting and keeping talent, and maybe not letting the bad guys onto campus to recruit our precious students who we've worked so hard to help develop. So that's a data point that I think all universities should start to have, along with the others that we talked about.
Thank you, John. So let's talk a bit more about our clients. I think we all agree that the opportunity to serve millions of clients is vast when we think about our industry and how we can help people create wealth or really help create this generational wealth. So let's talk about what impacts more focus, more advancements in diversity, equity, and inclusion can have on our future clients. And Benjamin, could you share what your point of view is about that?
Let me just, before I get into that, let me just say one quick thing about data. It's, there's a saying, I'm sure you probably remember this from home, and it says, charity begins at home. If you're going to assess where you are, you got to look inside first. And I think, we're looking at data that tells us, that gives us a reality check. Over the year, how many people of color left us, and why did they leave us, and what positions were they in our organization? That's important to us. We want to know the compensation, total compensation differentiation between diverse candidates and majority. Position, by representation of position. That's important to us, because we'll be able to show that we are conscious of that, but more importantly, we are maintaining equity and equality in compensation within our organization. So that gives us a chance to really tell a very powerful story in terms of what we're doing within our organization that may not be outward facing. But then, the question in terms of our engagement with clients, the notion that this diversity initiative is a zero sum is gradually being debunked, and it's being debunked by clients saying to us, we want to know your position on diversity, equity, and inclusion. And clients are asking that question, and they're asking us to present, to share with them, to take them inside our organization. That speaks volume. I recall just 2 weeks ago, I had a chance to present to an organization that we manage their funds. It's a foundation, a $170 million foundation that we manage their funds, and it was a board meeting, and they wanted us to talk about our diversity efforts at Stephen. And then after, they said, well, come in and chat with us about 10 minutes, Benjamin, and then we're going to spend 20 minutes asking you questions. And it was a give and take, very no holds barred discussion on where we were, what our long-term goals, the challenges that we were facing, and the understanding and belief that we were really serious about diversity. And I've done 3 of these in the last maybe 2 months. And so the reality is, it's not just a one-time conversation. You're going to be back next year, and you can't say the same thing next year. You can't say, well, we're working on it. No. They want to be able to show that you're actually moving the needle. And so you got to be very transparent with where you are and where you're not. And so we're starting to see those conversations where clients are asking for justification, commitment, and understanding of where the organization is, because, and I think the future belongs to the organization, the financial space. They recognize that early. They understand the value of diversity, that they will own that future. That's where growth will come to them. And for organizations that are still sort of playing around with a commitment, I think they'll realize that the real zero sum is the loss that will come to them in potential clients. And I think the African American space is one of the undiscovered, wealth opportunities in this country, because we haven't really utilized the financial services industry as much as we can. We've continued to put our money in savings accounts, getting relatively few interest rates on it, and because we have not been able to break in to showcase the value of doing business with us. I see that as the real game changer, and clearly an education opportunity. We've got to build a bridge, and this bridge is not a bridge of just of bricks and mortar. This is a psychological bridge. This is an education bridge that espouses to the African American space that we can actually help them grow well. But before they believe us, they've got to see us. They've got to be able to see that there are African Americans and other minorities that are engaged in them. And so we have to be true to our commitment on diversity. And I see this as an as an opportunity, not necessarily as a problem.
Thank you, Benjamin. And John, would love to have you weigh in also on what you see the client opportunity being.
Sorry. I'm sorry. Could you repeat the question? I'm sorry.
Yes. So, John, we're talking about the impact, more of a focus on diversity, equity, and inclusion can have on increasing the clients that are involved in the assets and wealth management space.
Yeah, I think that the way that I look at that is a little bit differently. It comes down to this idea of measuring the purchasing. So again, I keep mentioning the University of Chicago. I'm, full disclosure, I'm vice chairman there. I've been involved for 20 years, and former President Bob Zimmer was a huge believer in diversity and inclusion in everything that we do. And one of the conversations we were having was about the lack of wealth in our community, which led to, then the data is very clear. Ray Bashar and his team from the St. Louis Fed has this data that between 1992 and 2016, college-educated Blacks saw their wealth decline 10%, while college-educated whites saw their wealth increase over 90%. So this 100% difference over roughly 25 years in wealth gap problems. So one of the things that Bob Zimmer was concerned about, because of the wealth gap, we had less of a pool of minority talent to recruit to the board of the University of Chicago. And we came up with the idea that if the university and a progressive institution not only recruited more minority students, but spent money with minority-owned firms and insisted that the majority firms they worked with had minority partners and managing directors on the relationship with the University of Chicago, all of a sudden, you would be able to create more and more and more wealth and create a pool of talent. So I think the same thing is in this financial services industry. If we find by working with minority-owned companies, insisting the majority suppliers we work with are diverse, all of a sudden, we're going to have more diverse, wealthy families that will then be customers for all of us. So I just think nothing's more important than figuring out a way to solve this wealth gap, because the wealth gap's tied to so many of the crises and challenges that we face in this country.
Thank you, John. That's really what an inclusive economy is all about. So appreciate the thoughts there. Okay, now as I'm conscious of the time, so I'll start bringing us to a close. It's been such a pleasure having this conversation, but I would love to get some final thoughts. We've got people listening in, all kinds of people listening in, and I would love for you all to offer something in terms of what those individuals can do as part of their journey towards helping us have a more diverse and more inclusive environment in our organizations within assets and wealth management and even beyond. So Stacey, you go, 30 seconds. What would you recommend?
30 seconds.
Yeah.
I'd recommend just embrace the discomfort. Go for it. If you haven't been around this space, it can be intimidating. You're going to say the wrong thing at some point. You're going to use imprecise language, and that's okay. If you come to the table with authenticity and a true desire to learn and to be able to try and empathize and connect with other people and advocates in the space, that's the best place to start. So just step in, get involved. Yogi Berra says, begin at the beginning, just go and do it.
Yeah. Be comfortable with uncomfortable. That's a good one. Other nuggets are there too. Thank you, Stacey. Benjamin, 30 seconds.
I want us to look at diversity as a journey. And in that journey, there are different roads to take. And I think organizations should think about not necessarily taking the roads that are already been created, but actually being pioneering and creating new roads. And being able to willing to face up to the challenge along the way. And I want to say for the record that as sort of leaders in this space, it's not easy. It takes a lot of conversations and also sort of developing a thick skin when it comes to being challenged as to the viability of what we're trying to do. But I close with, do you remember The Wolf of Wall Street, Jordan Belfort? in this conversation. He said something that I want to extract because I think is really powerful. He said, I want you to back yourself into a corner. Give yourself no choice but to succeed. And let the consequences of failure become so dire, so unthinkable that you'll have no choice but to do whatever it takes to succeed. I think that's the kind of idea and notion that we need to take when it comes to this journey on diversity. And I thank you for the opportunity to be on this panel, and I appreciate it so much. Thank you.
Thank you, Benjamin. And John, some final words from you on what we will leave our audience with in terms of takeaways.
Well, as we've talked about, I think what's going on today between two great institutions, with Edward Jones partnering with a great university, and I think those kind of partnerships are so powerful. And to be able to continue to do that, the only thing I would add that I didn't talk about earlier is that working with the local public schools is important too. If we really want to build a pipeline of diverse talent in this industry, we have to be a more financially literate society. And most public schools, especially urban public schools, do not do an adequate job of teaching young people about the stock market, about investing, the magic of compound interest, the kind of wealth that can be created in the financial service industry. So I think all of us can, what we've done at Ariel, we created the Ariel Community Academy 25 years ago. If we can get more and more financial institutions to partner with urban public schools, I think we can create role models and a pipeline of next generation talent.
Thank you very much, John, and thanks to all our panelists, Benjamin, Stacey, and John, for your perspectives and for sharing so much valuable information with our audience. I know we've come away learning a lot, and we appreciate again, the partnership, Stiefel, Edward Jones, Washington University, and Dimensional Funds in making this a reality. And when we think about diversity, again, we're thinking about all dimensions of diversity. Everyone is included in the conversation. And Stacey, I want to also thank you for just sharing what's in many of our hearts, maybe every single person listening in and beyond, about what happened yesterday and thinking about those families. And our thoughts and prayers are with all of them.